Hey guys, welcome to another episode of the Block Thrasher Daily Crypto Update, where we are simplifying cryptocurrency by shattering the complexities of crypto with news, commentary, analysis, and education. Hey, listen, I am very sorry. I have not been here the last 2 days. Let me explain why. First of all, when I got up on Monday, to deal with a tire issue. So currently I am traveling the country. That's why I'm in different places all the time. It's been fun. It's been exciting. It's incredible. Today I am in the beautiful state of Oregon, just outside Bend, Oregon, sitting on top of a mountain in a beautiful house overlooking the beautiful mountains here. There's the Sisters, and then there's Mount Washington, and I think Jefferson Mountain. They're snow-capped, and they're massive and beautiful, surrounded by trees, wildlife everywhere, deer every place. It's really great. Super nice. However, traveling in a rather large fifth wheel and truck and tires seem to be a continual problem. So on Sunday when traveling, looked at one of the back tires, which is pretty much brand new, and found a tire in the sidewall, and then it began to lose air. So I had to deal with that Monday morning, take it into Le Schwab. Forgot to take that actual tire, but needed to get a rotation on the truck as well. So went in to get a rotation on the truck, and in the process found out that 2 of the tires in the dually had got something wedged in between, which had sliced almost completely through the sidewalls. So now we're talking 2 new back tires, and it just goes on and on and on. So that happened on Monday. Then on Tuesday, was leaving that area of Oregon to travel a couple of hours to a new place. Woke up to another flat tire on the fifth wheel, and it's just like thing after thing after thing. And then getting internet connectivity, because I was in was near Klamath Falls, but not in the city, out 30 minutes away in the country near this little town called Bonanza, Oregon, and trying to get internet connectivity there was a little bit difficult. So when I attempted to upload the daily update, it just didn't work very well. And that's why you haven't seen me or heard from me the last 2 days. And I apologize, because I make every effort to make sure I get the most relevant information concerning cryptocurrency and the news of the day to you every single day. So let's jump into it today, and let's take a look at our word of the day. Actually, what I'm going to do, because it's been a couple of days, is I'm going to give you 2 words, 2 great words that I thought just applied really well to cryptocurrency. I think the first one actually describes Dogecoin quite well, which currently is down 18.3% in the midst of an otherwise up market. That is, in the last 24 hours, it's dropped 18.3%, Dogecoin to 31 cents, which is still, incredible. And I use that word in the sense of just like mind-blowing, like almost illogical, but not necessarily. I mean, it is from a fundamental standpoint, not from the standpoint of what can happen when you have the herd mentality kick in and the crowd can go after and support something. Anyway, the word of the day is Brummagem. 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 It means showy, but inferior and worthless. And I think it's a great word for Dogecoin because it's very showy. It's got Shiba whatever it is, the dog, cute little dog that is, from a branding standpoint, not bad. It's iconic. It's meme driven. It's something that people like to create memes, all kinds of memes about, and place all over the internet, and celebrities jump in. Just yesterday it was 420, right? So they tried to make 420 Dogecoin Day. Like we're going to preempt what 420 means otherwise, or merge the 2 together. So even Snoop Dogg came out and created a video. And so while we're talking about this, while Dogecoin is a Brummagem, it is showy but inferior. It's definitely inferior. I mean, by all metrics, no matter how you look at it. If you do any kind of analysis on Dogecoin, which, and you compare it to other cryptocurrencies in the top 10, if you look at it from a standpoint of coin economics, right? Supply, inflation, how it's mined, how it's developed, if there are the fact that there really aren't developers, team behind, right, these sorts of things. it is inferior, right? Even if you look at it from some people say, well, no, it has great use case because it could be used for giving tips and payments and stuff like that. And sure, it can, but there's actually better solutions, faster solutions for that. So it is inferior. Whether it's worthless, hey, worth, value, it's totally subjective at the end of the day. Things have value because we value them, because people value them. Some people like to talk about intrinsic value. People like Peter Schiff, who don't like crypto. One of their arguments will be, well, crypto has no intrinsic value. Bitcoin has no intrinsic value like gold does. The fact of the matter is that gold has use cases. Sure, that's what they're typically talking about, is gold has a use case. Therefore, it has some intrinsic value, whereas crypto doesn't. Crypto has use cases too. Cross-border payments, right? Fast payments, transparent payments on the blockchain, or not if you're on a private chain. All kinds of use cases that we can think of. And then more continue to pop up, NFTs and DeFi and on the list goes, right? So gold, does it have intrinsic value? Well, not necessarily. I mean, it could get to the point, if you had so much gold, you only want so much gold. I mean, listen, if it has value, people are going to want it. But for the perception, it's about perception is the point here. You may want something else other than gold if you're starving. If your need requires something else, you may desire water. If you're in the middle of the desert and you haven't had water for 2.5 days and you're nearly dehydrated to death, gold isn't going to do you much good. You'd much rather come upon a live spring with good, clean, pure drinking water than you would a huge deposit of gold in that moment. Same for food. Just easily understood things. If all hell breaks loose, you're going to want food, you're going to want water, you're going to want bullets, you're going to want ability to defend yourself, keep your family alive. You aren't going to give much of a crap for gold, right? Same with crypto. Unless it has the ability to purchase you those things that you need. But all of that's really based upon culture. It's based upon perspective. It's based upon belief system. So our monetary system, the monetary system of the world, the fiat currencies of the world, the US dollar and others, they don't necessarily have intrinsic value. They have use case and they have value that is somewhat derived from whoever it is that's backing them. But it's all about perception. It's all about belief. It has value because we believe it to have value. If we lose that belief, then it no longer has value. And so with Dogecoin, while I would say it's a brummagem, it has value right now because a lot of people perceive that it has value. Although, what's interesting about it is that's something to look at when you're analyzing. Is this something I should invest in or not? Or how should I invest in it? So really, from my view, when I think this through in terms of Doge, it's not an investment, right? Because most of the people that are playing with Doge right now aren't looking at it that way. They're not looking at it as something that has value. There are some that might argue, well, there's a bit of a use case. I mean, you can go and buy some merch from the Mavericks, right? Because Cuban has set that up now. Or you can use it in this website to buy something or tip somebody or whatever. So some use case. But what I'm trying to say is they are looking for very rapid price gains. So it's a play. It's a trade. And in that sense, it's not, hey, if that's the game you want to play, then play the game. And you might win and you might win big if you're able to properly analyze or estimate or guesstimate what the crowd is going to do. Like if you're really good you're all over social media and on Reddit and in Twitter and in all the different places, Discord, and that the crypto people are, TikTok, and you're seeing the increase of memes, you might time it right. You might get in right. You might be able to pull out and make a nice big fat gain. Great. Props to you if you can. However, that's what people are doing. They're sitting there with their finger on the sell button because they know the thing's going to crash at some point. They're trying to buy low, sell high, be that day traders, and the fact is that every time this happens, most people get burned, especially the people that are newer. And that's a negative for the crypto industry because people come in and they think, well, they don't understand. It's not like Bitcoin where, Bitcoin's had these cycles, but also it's having this mass adoption. It's having institutional adoption. It's having all this stuff happen that is making it less volatile over time, at least where we sit today, this is the way it seems. Will we see another 80% decline in the market? Boy, I really don't think so. But I could be wrong. That's the thing about it. That's what makes this fun in a way, because we don't know, right? But anyway, brummaging, word of the day, BRUMMAGEM. Great word. Another word for us today is longanimity. 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 I like it. It means patient endurance of hardship, injuries, or offense, forbearance. Well, I tell you what, this applies to cryptocurrency, because if you go to, I think it's 99bitcoins.com, and you look at all the obituaries, all the statements that have been written about how Bitcoin is dead, how crypto is dead, and there's still a few people out there that do that, although the tide is significantly shifting. You're no longer seeing this sort of thing, but man, it's been a long road that's required patience and endurance of hardship, injuries or offense, forbearance, for sure. And how about it? It has paid off. If you were one of those who saw it in 2013, 14, even 10, and you got into Bitcoin, and then when the alts started to hit, you jumped into Ethereum, or you started mining, or whatever, you got involved, and you most who did that did it for ideological reasons, because they believed in the values. And that's one of the things that any time when we start to see this surge of people coming into the marketplace, and the Doge coins and the Safe coins and the Mars coin, and all these kind of, and it's all this like massive hype speculation of like, I'm going to get rich because I'm going to buy this thing. It's going to go up 1,000%. It's going to go up 10,000%. I'm going to pull out, right? Those are not the people that are exercising longanimity, right? It's the people that are applying longanimity, patient endurance of hardship, injuries, offense, forbearance, who really profit in the end and see incredible gains. Almost anyone that's been in the space for a long, long time can tell you this. Two things. Well, I shouldn't have traded so much, because I would have actually just made more if I bought and held. HODL. And I wish I wouldn't have sold. And then the third, there's actually a third. I wish I'd gotten more. Just talk to the OGs. Talk to the people who've been around since 2013, 16, that time frame. Still here today, right? This is what they will say. And it's been my personal experience too. All right, let's jump in and take a look at the market. Using CoinGecko.com today to look at the market. The market cap is actually up 1.5%. I think we dropped just below $2 trillion momentarily the other day. We had a bloody Monday. We had a bloody Tuesday. The weekend was rough. The market was down. But if you zoom back and you look at the big picture, it's not bad. Prices, the market was still at really great level. Currently today, $2.1 trillion for the total market cap. Not bad at all. And according to CoinGecko, Bitcoin's dominance is down to 49%. ETH has gone up 1% from what we've been typically seeing. It now sits at 13%. We're starting to see a little bit of a decorrelation happen here in the market, which just simply means that normally when Bitcoin goes down, I've always said this, when Bitcoin goes down 5%, the alts go down 15, 20%. And when Bitcoin goes up 5%, the alts do the same. And that's true. And we still, just this weekend, we had this bloody weekend, bloody Monday. We saw that. A lot of coins were down 15, 20%. It was a great buying opportunity. I took advantage. I hope you did. But we're still seeing, we have not decorrelated completely, because the market is, generally speaking, driven by what happens with Bitcoin. Now, unlike with equities or stocks, but we are starting to see, as Bitcoin dominance drops and as these other projects just ascend, Ethereum and Binance are good examples. Even XRP, even with Dogecoin doing what it did. Now Dogecoin was the most decorrelated asset of this week, because when the market was going down, and even Bitcoin was down, it's down 12% on the week. Doge was up 234%. So that's an example of decorrelation. Some of the other alts doing the same. So we do see it. But eventually, as some of these alts rise and get closer to parity with Bitcoin, which I absolutely think is going to happen. I mean, Bitcoin's the king. Bitcoin was first. This, of course, could be a huge debate, and maybe sometime I'll do a podcast with some Bitcoinists who's a maximalist, and we'll have this kind of debate. You know, they think it's a horrible thing for any alt to rise and to match Bitcoin, or maybe even surpass. Could something? That's the question. Could an altcoin eventually? At that point, obviously, it's no longer an altcoin. Will it surpass Bitcoin? I absolutely believe this is possible. Why not? I don't think there's a really, really strong argument as to why that can't happen. Because Bitcoin's advantage is first mover advantage. Some will argue, well, it's also very difficult to update the code, and that's a positive. Well, maybe it's not. Maybe there's a better system that's superior where governance happens in a streamlined and fast way. So when their issues need to be dealt with, they can be dealt with quickly and easily and equitably for everybody involved. That remains to be seen. That's another one of the huge and really exciting and fun things to watch in the cryptocurrency space. What is going to, I mean, this is so nascent, right? It's so new that what is going to actually work really, really well over the long term? I mean, when people get so caught up in prices and what's happening right now and the meme coin, when you zoom back though, it's like, and the regulatory picture comes into play with that too, because that could be a factor. Will these projects be able to actually comply or adapt to regulatory issues? All right. So much. That's why I love this. I'm so excited about just doing this podcast and being here with you guys and walking through all this stuff with you guys moving forward over the coming years. It's going to be exciting. All right. Getting back on track here. We're supposed to be looking at this market and what is going on with prices. Ton of volume, man. $290 billion of market volume today so far. Well, Bitcoin is down 1.3% in the last 24 hours. So we do see a little bit of decorrelation going on here because everything else is mostly green for the most part. It's currently Bitcoin $55,492.18, which once again, we're 5,000 off the 60,000 mark. Yeah, we took a hit, down 12.4% on the week. Ouch. We were up above 60,000 for a number of days, closer to $64,000. But zoom out and 55,492. That's not bad. That's not something to cry about. Not at all. Ethereum is up 7.5% in the last 24 hours. It is currently $2,379.34. Ethereum is looking strong as it begins to bounce back from that little blip that we had. Same with Binance Coin. Binance Coin is up 7.4% to $577.88. Binance Coin looking really strong. I'll tell you what, while I'm on Binance Coin, let's just scroll down close to the 80s. We'll talk about a project, a coin, an exchange that I don't know how much I've talked about it here on the podcast, but I want to bring it to your attention because I think it is something to watch in connection with Binance. Or, when I think about Binance and how well Binance has done, it came to mind what might be similar. And KuCoin. So KuCoin's currently at 101 in terms of market cap. It's number 101. This is a great exchange. One of the most common questions that I hear from new people, either they call me or they text me or they're in the group, Facebook group, or our other forums. So how do I get this token? How do I get data? How do I get that? How do I buy this? How do I buy that? And so there's a lot of confusion, I notice. I think a lot of people are using their phones, and so they look at the apps and they think of the apps as all being the same, right? So like one of the questions that was just asked today in the Facebook group is like, what's the difference between Exodus and KuCoin? And the difference is Exodus is a wallet. Now these wallets, whether it be Exodus or Atomic or some of the others, they've brought in features, right? That where you can buy a lot of the cryptos directly with your debit card maybe, and they use a third-party provider for that. Or you can exchange tokens inside the wallet, or you can even stake your tokens inside a number of the wallets. So these are good. These are very useful kinds of things. However, those are just wallets that are using third parties to do these services. So they're expensive. And the exchange, an exchange like Binance or KuCoin or any of the other top 10 or whatever, all the exchanges, Huobi and whatever comes to your mind, Gemini is a little bit closer to a wallet. They call themselves an exchange where they only have like 20 or 30. They don't have a lot of tokens, but these other exchanges like KuCoin, which is the one I want to talk about today, just has, hundreds, 1,000 maybe. I don't know. I haven't looked at the total number of coins they have listed, but they've got many, many, many coins listed. And then they provide you that trading. So if you're on the video, will I jump in? No, I'm not going to do that. You can go do this yourself. Sign up for an account with KuCoin. If you want, you can look in the description. I'll provide a link, which is a referral link. If you sign up to KuCoin and you send some crypto there, I'll get a little bit of the KuCoin token and whatnot. So the thing about it is it's a full-fledged trading platform. It's an exchange. So, with right now, you can't as a U.S. because with KuCoin, they're based out of Singapore. And right now as a U.S. customer, you can't buy directly with your debit card or your credit card or what have you. You've got to send crypto there first. So you either send a stable coin like USDT, Tether, or USDC or whatever. But you can also send Ethereum or you can send Bitcoin or you can send anything you want over there. And then you can trade and purchase the coins that you want. Now, one of the really great things about KuCoin right now is that if I think you can go up to, I want to say 5 Bitcoin in value a day of withdrawing without having to do any KYC. So you can still use it anonymously for the time being. We'll see if that remains the case. But it's a great exchange. It's a phenomenal exchange at the moment, and they're doing a lot of the things that Binance did in the early days. Now they're nowhere near the size of Binance, but they have a token. It's called the KuCoin token. It dropped 18% this week. It was up closer to $17. It's now down to $13.35. It went as low as 12 something. I think it has potential. Now, I could be wrong about this, but everything I've looked at, the exchange tokens, typically they do well. It's useful, this KSC token, because if you do trade on that platform and you use the token, you pay even lower fees in the trading. But it's also a staking type of thing where it's not staking like proof of stake like Cardano or Polkadot or something, but when you hold that token on the exchange, you get paid out in that token from the fees that people on the exchange use. So this is a way to get exposure to that immense profitability that exchanges are able to draw in through the service that they provide. And so I'll keep an eye on this one, KuCoin token, for sure as a long-term hold. I think this is going to be one of the better exchanges for a number of reasons. And it gives you exposure again to a Singapore-based exchange. Anyway, enough about that. Maybe I'll talk more about it in the future. I don't know, but that'll cover for now. I just wanted to touch on that while talking about Binance Coin and its price today. XRP is up 2.2%. It is at $1.36. So it took quite a hit this last week, down 23% on the week. Yeah, it's not been a really great week for XRP. We'll keep an eye on that and see what happens there. Dogecoin down 17.2%, which is actually, boy, if I was a Dogecoin holder, I'd be really happy about that because it could be so much worse. I mean, there's just that potential there with, I think 60% of the supply. We keep hearing that the percentage of the supply that's held by, top 10 or 20 wallets is increasing. So this just fundamentally creates danger from the standpoint of any one of those could start to, they may dump it all, which would totally crash the market, or they could start to bleed it off with very large sells, which is probably what, if they're smart, they'll do over time. And if these are massive miners, maybe even Chinese-based miners that are acquiring, millions of Doge every day as an ancillary acquisition while they're mining Litecoin, that's what they'll do. They'll just bleed it. So we'll see. Cardano is up 3.5%. Is currently $1.25. Polkadot is up 1.4% to $34.80. Bitcoin Cash saw this huge pump this last week in spite of the down market, up 27.9%, getting back into the top 10. It is now at number 9 in terms of market cap, and it is $948.66 today. Litecoin seeing a little bit of a bump, up 3.4% in the last 24. It is $266.35. Uniswap seeing a nice little recovery, having been down close to 10% on the week. It is now up 6.7% in the last 24 hours, so it's almost regained the losses that it saw this week. It's currently $32.57. VeChain saw this huge, massive pump. Again, VeChain, it's been making some waves, and with the partnership with Salesforce that was announced, we saw this big rise, up 58% on the week, currently up just 0.4%. It is now 24 cents. I want to keep an eye on Chainlink, which is going to be in one of the stories that we're going to look at today in the news items, is up 1.3%, up 5.9% on the week. And surprisingly, even though it's number 13 in terms of market cap, it's better known than some of those that are above it, according to some of the research that's been done, or I guess it would be more of a survey that was taken. USDC, the stable token USDC, continues to rise in market cap as more and more people seem to use it as an alternative to Tether. Stellar up a bit, down on the week, 22%. Maybe starting to turn around, currently 51 cents. THETA has dropped a bit in terms of market cap. It's now down at number 16. We did see it break into the top 10 there for a bit. And just as I predicted, I don't know, maybe 2 weeks ago, I love this project. I love what they're doing. I hope they have great success, but I felt like it had sort of reached its top, at least for some time. When it broke into the top 10 and was trading at 12, 13, might have even hit $14. It just seemed like that was about as high as it could go currently. It is up 4.8% in the last 24 hours to $11.52. Same with Filecoin, which has also dropped. It did peak. It did, pop into the top 10 for a little bit. It is now $154.73. But, with both of these great projects, great use cases, love them, but they can only bring in so much, for a seat, and then it's like, all right, the money's just going to go other places. Tron and Solana. Now, Solana is one that I've been telling everybody to keep an eye on, and it continues to rise. It is now at number 19. It's a phenomenal project, super fast transaction times, great tech, good team. It's legit. Up 21% in the last week, up 11% in the last 24 hours, right? Up 6% in just the last hour. It's currently $33.82. One of those super solid smart contract platforms. I put it right along with Algorand. Algorand being also lower in market cap, though. Great staking. Algorand, Solana, Avalanche, of course, Cardano, Polkadot being the big boys, and Ethereum being the number one dog for the time being. Again, just one of those other exciting things. Crypto right now, it's almost like, I was going to say soap opera, but that's not right. But it's like a drama. It's just fun to watch what's going to happen, to see these things unfold. All right, that's enough with the market today. Let's jump over and take a look at some of our top news items of the day. Here's a little bit of research that came out of Gemini, which talks about how many Americans know about XRP, Cardano, and Chainlink. So that was a question. And according to this report, which was published by Gemini, only 6% of crypto-curious U.S. adults have heard about XRP. This is phenomenal. I love this sort of thing because what this does is it illustrates how early on we are in adoption, when only 6% of even crypto-curious. So they're not talking about all U.S. adults. They're talking about those who are crypto curious. So I'm sure the survey went something like, "Are you interested in crypto?" "Oh yeah, absolutely. All right. Well, have you heard of XRP?" "No." Only 6%. Binance Coin is also yet to penetrate the consciousness of the mainstream with a 5% awareness level. An even smaller portion of this group of Americans know about Cardano and Polkadot. Just 2%. That is incredible. Despite both the digital currencies sitting in CoinMarketCap's top 10. Yeah, Gemini has found that 63% of all US adults are crypto curious. So it's good to have that little bit of data. 63%. So more than half, we've made headway. I mean, the fact that 63% are crypto curious, good thing. Meaning 14% of them already own crypto, while 23% are not interested in holding any. Only 14% of US adults hold crypto. Is unbelievable. Bitcoin is the king. Well, we know that. Unsurprisingly, a whopping 95% of US adults have heard about Bitcoin. The impressive percentage reflects the amount of mainstream media coverage that the flagship cryptocurrency has been enjoying over the past few years. Americans are much less aware of Ethereum, however, Bitcoin's closest competitor, with a market cap of $269 billion, with only 38% of them recognizing the name of the second biggest crypto. Bitcoin Cash and Litecoin come in third and fourth places with 24% and 16% respectively. That's interesting. Leading stablecoin issuer Tether completes the top 5. 8% have heard about Chainlink, the cryptocurrency behind the eponymous decentralized Oracle service. That's incredible. So more have heard about Chainlink than XRP or Cardano, even though Chainlink is much lower in market cap. Demographic trends. 74% of cryptocurrency investors are men. Come on, we got to get the ladies in, right? Ladies out there who are into crypto, and I know we got some of them in our group. I know we got a bunch of them. Talk to your friends. Introduce them. We need the ladies. The ladies actually control most of the money in the families, right? However, the gender breakdown is almost even among crypto-curious Americans, 53% male and 47% female. Okay, that's not surprising. That's good. The average household income of cryptocurrency holders is $111,000. The majority of American crypto holders are white, 71%. Most investors see crypto as a long-term holding. The average Bitcoin holder owns $8,512 worth of Bitcoin. Wow. So, not surprisingly, it's people that are in the higher income brackets that are into and holding crypto because they tend to be a little bit better educated and understand what's going on. All right, let's talk about Coinbase. Coinbase obviously being largest US exchange and probably the number one way that most people have been introduced into crypto and have purchased their first Bitcoin, for instance. Well, as we know, there was this watershed moment in the digital asset industry last week when Coinbase went public on the NASDAQ exchange with their coin offering, COIN being the ticker symbol. So the question is, after 1 week of coin, how is Coinbase's NASDAQ listing shaping up so far? How's it going? Coinbase's largest investors, Andreessen Horowitz, Union Square, Rabbit Capital, have already roped in multi-billion-dollar profits. So I would say it's going pretty well for them. April 14th was considered by many crypto enthusiasts all over the world as a watershed moment for the digital asset industry, as it marked the day when Coinbase, one of the largest crypto trading platforms in the world, made its debut on NASDAQ via a direct listing. As one can imagine, the lead up to the moment was replete with a market-wide surge, with Bitcoin scaling up to a price point of $64,800 a day before the listing went live. In the run-up to Coinbase's NASDAQ debut, Coin's reference price was set at just $250, with all the company's staff receiving a total of 100 shares each. Oh, that's nice, isn't it? Wow. What's more, in true crypto fashion, Coin's debut was mired by volatility, with stock prices rising sharply to around 430 just minutes after trading commenced. However, following this positive price movement, the value of Coin proceeded to plunge drastically, all within a matter of hours. Finally wrapping up its debut at a respectable price point of $328. Since then, Coin's value has continued to hover between $320 and $345. Not too volatile. Settling at the lower end of that range exactly 1 week after the listing. At the time of writing, the stock's total market capitalization is touted to be worth just under 64 billion, some way off the previously estimated 100 billion. Yeah, a little bit. So, is it a real breakthrough or just a bunch of hype? Coin's debut within the traditional finance sector is widely considered to be an important step forward for the crypto industry, especially since it provides investors who may not be interested in trading digital assets otherwise with an indirect exposure to cryptocurrencies. Providing his thoughts on the subject, Jel Pol, project manager for oil and gas multinational Shell's first 3 blockchain projects, as well as business director for Dusk Network, a privacy-oriented blockchain protocol, told Cointelegraph that Coinbase's direct listing is potentially a very interesting wake-up call for companies and regulators that are still sticking with the anything crypto-related is bad angle, adding, Coin's market capitalization now dwarfs the cumulative valuation of most of the world's largest traditional stock exchanges. Now that is huge. And they did it in years instead of decades. It is clear that they operate under the highest standards. Otherwise, a NASDAQ listing would have been out of the question. So it seems that self-regulation in this case has paid off immensely. Indeed, with Coinbase's listing potentially bridging the gap between the traditional finance sector and crypto, an increasing number of mainstream players seem to be quite bullish on Coin. For example, New York-based asset management firm ARK Invest, quick to snap up more than 1 million shares, currently worth around 350 million, which will be spread out across 3 of the company's exchange-traded fund offerings. Furthermore, it bears mentioning that back in 2013, American venture capital firm Union Square invested in Coinbase at 20 cents a share, essentially allowing the company to amass a total stock haul that is now worth more than 4.6 billion. So I'm going to stop there. This is good stuff, though. Yes, this bridge between traditional finance and crypto. The number one reason I think this is good is it's not so much that it allows for traditional finance to get exposure to crypto without doing it directly in an indirect way, because there's already ways that they can do that. But it's positive in terms of regulation. It's just another thing that would make it extremely difficult for anyone in control of the regulatory powers, that be, to shut us down. Because here we have a publicly traded company that's valuation is now more than all of the other traditional finance exchanges combined. So that's good stuff. All right, moving on. I'm going to talk about Safemoon for a little bit. And this crypto YouTuber, Lark Davies, you might have seen him, the Crypto Lark, has one of the biggest followings on YouTube. Kind of a nutty guy. Don't always like his analysis or his methods, but I agree with what he pointed out here. Recently, he tweeted a warning over the new Binance Smart Chain project, Safemoon. He likened its rising popularity to the now defunct Bitconnet scam. You might remember that. Some of you, we talked about that, Brandon and I, on a podcast episode a couple weeks back, where, and there's another in our group that has a direct experience who was a victim of the Bitconnet scam, as so many were. But Lark was saying here that the euphoria of gains is blinding users to, quote, the obvious. Bitconnet, just a little bit of history on that, arrived on the scene in 2016, promising high returns for holding, trading, lending, and mining its BCC token. Right? And it shot up into the top 10. But things began unraveling in January 2018 when Texas and North Carolina regulators issued a cease and desist order. Bitconnet has earned a place in history as one of cryptocurrency's biggest scams. But is Davies right to lump Safemoon in with the same company? Well, what is Safemoon? Safemoon launched last month on March 14th with a debut price of 0.0000008 Satoshis. Since then, particularly over the last week or so, its price has mooned. Safemoon is up 980% over the last 7 days, hitting an all-time high of 919 Satoshis yesterday. Safemoon is an auto-generating liquidity protocol that rewards holders and penalizes sellers. It imposes a 10% penalty on sellers and redistributes 5% to existing holders, while it's unclear who directly benefits from the other remaining 5%. 5% fee is split 50-50, half of which is sold by the contract into BNB, while the other half of the Safemoon tokens are paired automatically with the previously mentioned BNB and added as liquidity pair on PancakeSwap. So the project describes itself as a community-driven, fair launch DeFi token. It talks about 3 simple functions, those being reflection, LP or liquidity protocol pool acquisition, and burn. Its white paper says reflection relates to the concept of static rewards, which they say tackles the problem of falling APYs and encourages users to hold on to their tokens. Yeah. We'll see. LP acquisition relates to their mechanism of matching buyers and sellers, which they say creates a sold price floor or a solid price floor, therefore minimizing price dips. As the term suggests, burn relates to the burning of tokens, but in a documented and transparent way. The theory is to reduce supply and therefore increase the value of tokens. Some point out that the setup is similar to a Ponzi scheme. Safemoon's success relies upon more and more people buying in and holding, a model it encourages by penalizing sellers. However, some have praised Safemoon CEO John Caroni for his willingness to hold AMAs and engage with the community. But we've seen that before. Also, it's a Binance Smart Chain project, which Binance Smart Chain is gaining ground as a serious competitor to DeFi on Ethereum, but we've seen a number of rug pulls, right? The promise of cheap gas prices, gas fees, and quicker transactions appeals to users, but Binance Smart Chain's rise in prominence has been marred by several rug pulls since its inception. People expect rug pulls to happen on Ethereum due to its decentralized status, but because anyone can launch a token on BSC, the same problem remains. So all of this stuff that's going on with Safemoon is happening on a smart contract that is written, coded to interact with the Binance Smart Chain. The developers who created Safemoon can update that code and change it at any point in time. They can make it look like it was an accident, as we've seen happen with Meerkat, which is noted here. The biggest BSC rug pull to date was Meerkat Finance, in which 14 million BUSD and 73.6K BNB, totaling approximately 30 million, went missing in early March. The project claims it lost the funds through a hack, right? So they can make it look like a hack, and then boom, boom, millions of dollars gone. So very risky. So what's my conclusion on this? My analysis would be, hey, again, like with Doge, probably even more so than with Doge. If you want to take that risk and throw a little chunk of change at these type of projects early on and play the game, knowing full well that you could lose 100%, go for it. Don't consider it a long-term investment, though. It's just trading at that point, speculating. It's not investing. Now, someone might argue, well, that's the case with the whole entire cryptocurrency market. And yeah, if you're not a believer and you kind of have that global view that it's all risky at that level, still, in spite of the constant drumbeat of adoption and institutional adoption and positive regulatory movement, all right, it's not what I hold. This is huge. This is huge. This was a story from a couple of days that I wasn't able to talk about with you guys because I didn't do the podcast. Venmo users can now buy, sell, and hold 4 cryptocurrencies. So I'm guessing they can buy, sell, and hold, but probably not withdraw. Hopefully we do see movement in that direction. Currently between the 3 that are doing this sort of thing, the PayPal Venmo, which is a PayPal product, and Cash App, gotta say Cash App is definitely the best because you can actually send your crypto. Oh, and Robinhood would be lumped in there, I would say, with that group. But only Cash App allows you to actually withdraw the Bitcoin to your own private wallet and hold the keys, right? So let's look at this real quickly. PayPal's sister company Venmo has just rolled out crypto capabilities to its audience of more than 70 million users. So this is cool. This is sweet. This is great for adoption because now we got 70 million people, a percentage of which are going to be like, what? What's this? What crypto on? Wait, what? You know, and who knows where this is going to go in terms of actually being able to like send crypto back and forth. Well, buy, sell, hold. I don't think they're going to be able to at this point. My guess would be send crypto back and forth to each other. But if they open that, that's a floodgate right there. Just pay me with crypto. Just send me a Venmo, you know, send me a little Ethereum or whatever. Send me a little Cardano. Venmo adds crypto. Venmo will now allow its users to invest in Bitcoin, Ethereum, Litecoin, and Bitcoin Cash directly on the app via a new feature dubbed Crypto on Venmo. Users can purchase, hold, and sell crypto worth as little as $1 in the app. So they're gonna treat these things like stocks. If you're buying a stock, right? Payment app has also added in-app guides and video tutorials to spread cryptocurrency education. Daryl Esch, the senior VP and general manager at Venmo, said, "Our goal is to provide our customers with an easy-to-use platform that simplifies the process of buying and selling cryptocurrencies and demystifies some of the common questions and misconceptions that consumers may have." So he's using that. I always say, shattering the complexities of crypto. Venmo wants to demystify some of the common questions and misconceptions that consumers may have. PayPal first launched the service on its global web and mobile application service in October last year. Recently, the payments giant also moved to fund purchases using cryptocurrencies. That's good. See, those are the things we need to see. I mean, this is exciting from an exposure standpoint, absolutely. But I have a little bit of trepidation because the concern is what we really need is we need, like PayPal did, we need to be able to buy and sell goods and services, and we need to, you know, use the Venmo app and just like you do with Apple Pay, Samsung Pay, or whatever, pay, but say I want to allocate, you know, X amount, percentage amount of my holdings of this token and that coin and that whatever, and purchase my drink or whatever it is. When we see that happen, and then when we see the ability to actually withdraw that crypto that has been bought to a private wallet and send crypto back and forth between users, then we'll have arrived. That, you know, that's like best case scenario. However, they're going to, you know, that goes back to the regulatory thing, because they're obviously the intent of the SEC and some of the regulators would be, no, we don't want these being used as currencies. We want them to be like stocks. We want them to be assets that really the only thing you can practically do with them is hold them, buy them and hold them. So we're going to tax every transaction, capital gains on top of it. So now you're paying sales tax and capital gains tax. What would be phenomenal, something I talked about before, and it would be great for crypto. Man, it would be so good, is if there was something that there was an exception made. If a transaction is under $1,000, $2,000, I'm sorry, $200, whatever it is, and it's in a purchase for goods or services, no capital gains, right? This would be stimulus to the economy. But see, the thing is, the stimulus isn't really about stimulating the economy. I mean, on the one hand, it is. Okay, but it's also about buying votes through the benevolence of the government. I mean, it makes people feel good. Hey, look, I just got this check in the mail from the Treasury. They care about me. They love me. They're providing for me. So good. I like this government. I like this administration. I'm going to vote for these guys again. You see it? Do you see that? You see that there? If we get UBI coming in, even more so. Oh, man. They're watching out for me. They care about me. They're making sure that I have a place to live and food to eat. And self-reliance just goes. The other day I was in a Subway and I talked to the owner. Sign up on the wall. It says now hiring. I see it's everywhere. Every fast food place, every chain. You go in there, they're all hiring. How's it going with the hiring? Oh, she says, terrible. I can't get anybody to work. I hired people that quit. The people that were working quit. Obviously, there's the COVID issues, but I said, what do you think? Why? She said, They don't need to work. They're on unemployment. They're getting stimulus checks. You combine it all together. This was in Oregon. It was in Medford. No, Klamath Falls. Combine it all together, and they're like, I'm not. And then she says they just walk out. Don't need to work, making more money. So those entry-level jobs, they're making more money just being on the benefits than they are working. The UBI, Universal Basic Income, comes in. What do you think that's going to do? It's going to be impossible. The only way these places are going to stay open, Subway, McDonald's, whatever, is they totally automate everything because nobody's going to work those jobs. It isn't going to make more money if you're sitting around playing video games all day or doing whatever than working those jobs. And they can't really hire people. She was paying $12 an hour. They can't really pay people $30, $40 an hour or whatever, incentivize them enough, and sell a sandwich for $10 like everything is now. You go to a fast food place, get a burger, $10, right? They are paying. A lot of the places are paying their employees more, which is great. But we're also paying for that every time we go through. And, next thing you know, in order to incentivize people to actually work, they're going to have to surpass whatever it is that they're making through the benefit. They're going to have to pay people $20, $25 an hour. And then you go through your In-N-Out or your McDonald's or whatever, and you're going to be paying $15 for a burger and fries and Coke. Just the way it works, right? That's the market. So it's interesting what's happening. Anyway, got on a little rabbit trail there. Now, this is huge. This was also from a couple of days back, but you might have missed it, and I wanted to bring it to your attention. China has changed its stance on Bitcoin a bit and now sees it as a, quote, investment alternative. And see, this is going back to the conversation I was just having a few seconds ago, though, that governments are starting to be more okay with crypto being like an investment, right? As long as it isn't a currency, as long as we don't start using it to supplant their fiat. And in China's case, even, they've got their CBDC already. As long as we're not replacing their system that they can control, right? Because it's a control mechanism. That's what it is. Why do you think governments took over the production of money and the control of money? Because it allows, we can help. So we don't have capitalism in the US. We have crony capitalism. We can incentivize the businesses and companies that we want, and we can control the businesses in such ways by incentivizing them to take particular actions, to do the things that we want, whatnot. So it's a control net mechanism, for good or bad, however you view it, it's control. Taxation is control. Why are we taxed? Do we need to be taxed? If they can just send us money, stimmy checks, right, and just create that money, why are we taxed? If the government spends orders of magnitude more than they bring in, and increasingly so, why are we taxed? If they can just create that money, right? There's no limit. If inflation isn't a concern, these are questions, right? Why was the IRS created the same year the Federal Reserve was created? Why was the Income Tax Institute the same year that we went to a central bank? Because it's control. It forces people to use that currency. So that's obviously for so long been their fear. And with crypto, that's their fear. Their fear is that they just become completely irrelevant and lose that power and lose that control. There really is no need for tax when you're on a fiat-based system, because the government, our taxes don't finance. Sure, that money goes in, and sure, that money is used and spent, but way more than that, way more than the receipt on taxes has been spent for generations to come. I mean, like they'd have to tax us 100% for, I don't remember the numbers. Somebody could run that analysis and bring it, but we'd have to be taxed 100% for a long time just to catch up and pay off all the debt, right? All of the excess spending, unfunded liabilities of the federal government. It's huge. It's massive. It's insane. And it's the way it works. Anyway, that's for another day. Going back to the China stance. After 4 years of banning the issuance of trading of cryptocurrencies, the People's Bank of China seems to be changing its stance. This follows comments made by the Deputy Governor of the Central Bank of China, Li Bo, who described Bitcoin as an investment alternative. Cryptocurrency regulation in China would be a huge win for the industry. Prior to the 2017 ban, Chinese residents were one of the biggest Bitcoin buyers. In 2017, China banned initial coin offerings, ICOs, and later in the year, it banned the trading of cryptocurrencies and cracked down on crypto exchanges. See, so this is one of the things that I often talk about, how right now what's happening is different than in 2017. And a lot of people forget about this. Some people think it's a market cycle. Like that would be an argument of a lot of people that especially believe in like technical analysis and all this other stuff, which I think is garbage because the market's too new. This was the thing. This was huge. I mean, and it happened in the U.S. too. The concern about the ICO thing, that the U.S. was going to step in, and they did with some things, like with the Bitconnet thing, and some of the states did that. But this is the thing. Back in 2017, right? China banned the initial coin offerings, and later in the year, it banned the trading of cryptocurrencies and cracked down on crypto exchanges. Despite this, it remains the biggest Bitcoin mining hub. Just last week, the Southwest China blackouts led to the total Bitcoin mining hash rate dropping by 15%, which is something else we didn't get a chance to talk about on the podcast that could have had something to do with that market dip. There was a big blackout, right, on the electric grid in China. And so, boom, the hash rate of Bitcoin just dropped by 15%, and that's always a concern to people. So it could have had an impact. Crypto regulation coming to China. Ahead of the launch of the bank's own digital yuan, regulators seem to be shifting their tone on the wider cryptocurrency industry. Li Bo, the deputy governor of the Central Bank of China, stated they are not a currency per se, and so the main role we see for crypto assets going forward, the main role is investment alternative. You see, that's exactly what I'm talking about. Could they be currencies? Hell, absolutely, yes. But this is what they want to do. If they want to frame crypto in such a way that they're not cryptocurrencies, they're crypto assets, right? We use the term cryptocurrency because that was the intent, the authorial intent of the creators of Bitcoin and the other alts. So she's not that, whatever you look at, cryptocurrencies. We want our currencies to be hard money so that they're not constantly losing value. But no, their view is we control the currency, but you can have it as an asset. So it's going to be interesting to see what happens going forward. The problem with it, though, is it's so easy to exchange crypto, user to user, peer to peer. So the only way I can see a place like China actually achieving this is to regulate crypto in this way. And this could be what happens. You cannot have a private wallet. You cannot have the keys to your crypto. The only legal way to own these assets would be through a bank, a licensed, state licensed, approved by the Central Bank of China entity. You can go there, you can use your CBDC digital yuan, and you can buy Bitcoin, but they hold it. So it just becomes an asset. It just becomes it's like a stock. It becomes like buying gold, but not ever even being allowed to hold it physically. You can have gold, so-called supposed, and then that opens up the door for abuse. Because those third-party entities, those banks, they can sell more Bitcoin to the Chinese people than Bitcoin exists. It'll be paper Bitcoin. It'll be derivative, right? And the bank won't necessarily be forced to go buy actual Bitcoin on the blockchain. They can just they'll just do the fractional reserve thing. If I had to guess, that's where China's going to go. We'll see. If I was them and I was trying to achieve their ends, which is maintain power and control, that's what I'd do. Here are 7. Moving on to our last story of the day before we do a little bit of. Actually, you know what? Are we going to do Clubhouse story too? Yeah. Let's do the Clubhouse story, and then we'll talk about the last one, which is coin highlights. 7 coins to look at. Clubhouse Media launches new content house for tokenized digital art and NFT sales. A fresh press release from Clubhouse Media Group says that the company intends to create a new content house to enable top-notch artists, experts in crypto and personal finance, influencers, crypto investors, and NFT lovers to come together in one marketplace. Clubhouse Media plans to tokenize content made by creators and market it on popular platforms, along with tokenizing digital artwork to prepare it for sale. This is huge. With its new content house called Blockhouse CH, the company intends to obtain newly made pieces of art from in-house creators, tokenize them, and market them on platforms like Rally.io. It will also seek to purchase promising pieces of digital art from creators beyond the platform for tokenizing and selling them as non-fungible tokens, NFTs. Creators invited to the new content house will be creating digital art, and influencers will be marketing it to get it sold. Blockhouse CH will also ensure the creation of special social media content for audiences interested in digital currencies, personal finance, angel investing, collectibles, NFTs, etc. The president of Clubhouse Media, Chris Young, stated that Blockhouse CH will be the first crypto-focused content house to combine all things crypto and NFT. Blockhouse CH is the expert in pitching these new products to investors and other interested parties. Wow, this is huge. This could be huge if they pull this off with a huge Clubhouse audience. Very, very interesting. All right, last story of the day. Here are 7 sub-billion market cap altcoins with backing from Coinbase Ventures. Mina, I think would be the way it's pronounced, protocol. The team behind Mina Protocol says that it is a layer 1 protocol designed to deliver on the original promise of blockchain. Excuse me. True decentralization, scale, and security. Mina tries to achieve this true decentralization by replacing the blockchain with an easily verifiable, consistent sized cryptographic proof. Mina, IOU, is the ticker symbol for Mina. According to Mina, it dramatically reduces the amount of data each user needs to download. Instead of verifying the entire chain from the beginning of time, participants fully verify the network and transactions using recursive zero-knowledge proofs, or ZK snarks. Nodes can then store the small proof as opposed to the entire chain. And because it is consistent size, Mina stays accessible even as it scales to many users and accumulates years of transaction data. Interesting. Might be one to look at. Rarible, ticker symbol RARI. Rari is the governance token of non-fungible token NFT marketplace Rarible. I definitely think this might be one to look at for sure. I've heard it, it's popped up in story after story after story. And this also has backing support from the likes of Mark Cuban and others such. We could see, I like Bondly in this space, but we could see Rarible stepping out and becoming one of the leading marketplaces. And if it does, it could be huge. So Rarible, it allows the most active creators and collectors on Rarible to vote for any platform upgrades and participate in curation and moderation. It is worth noting that over half of Rari's total supply is reserved for sellers and buyers on Rarible, on the Rarible marketplace, who will receive a Rari through weekly distribution according to weekly purchases and sale volume. So that's interesting. So they've set this up in such a way to incentivize content creators and artists to use their platform, it sounds like, which is very smart. This is interesting in relation to what we just looked at with Clubhouse. And it's interesting that Clubhouse, I wonder if Clubhouse might partner with something like Rarible. It seems like it would make sense to bring that audience and then the already developed abilities that Rarible has. But we'll see. Maybe Clubhouse does their own in-house type of thing. I'm sure they are looking at Rarible. Another is Rally, ticker symbol RLY. Rally is an open network that enables creators to launch vibrant and independent economies with their communities powered by the Ethereum blockchain. It provides anyone with an online community the ability to launch their own coin without the complexity of coding on the Ethereum blockchain. It is a decentralized platform completely governed by the community, which means that creators and their communities have unfettered control to use their social tokens across all social platforms. Interesting. I want to look at that one a little bit deeper. The fact that it's launched on Ethereum would be a little bit problematic to me, considering what the fees are like. And you can do this already on Cardano. This creation of tokens simply and easily like this without the need for coding a smart contract like you have to do with Ethereum. So essentially what Rally's done here, it looks like, is they're a bridge between the user that wants to create a token for whatever, use it on social media platforms, and create that token on the Ethereum smart, on the Ethereum using a smart contract. Normally they'd have to understand smart contract coding, right? Solidity programming language on the Ethereum blockchain to do this, but Rally's that intermediary in between this, like making it simple and easy. So auto-generating the smart contracts to do this. So, I mean, there's a measure of usefulness there. Audius, this one's actually more interesting. Audius is a brand new streaming it's a streaming platform built for musicians, not just those signed to labels. So all musicians. Audio enables network security, exclusive feature access, and community-owned governance. The audio protocol gives everyone the freedom to share, monetize, and listen to any audio. And that's bad. That's badass. That is cool. The audio allows users to obtain a say in the future of audios via active contributions to the network. So we've seen a couple of, well, there was a token a while back, and we're talking like, I remember in 2017, one called Music, which was trying to do this, or at least the token was Music, and it really just never went anywhere, never took off. We're at a total different time now, and if something like this has backing of Coinbase Ventures, then they might have the marketing capability and to pull this off. This could be very cool. Very, very cool way for all musicians to create content and deliver it and get paid in crypto and just cut out the intermediaries, right? The third parties, which we all know for so long that musicians have starved financially, even though signed to labels, while the corporations just benefit greatly, except for the big names, of course. So good stuff here. Keep Network. And I believe this is the last one. Oh no, 2 more. 3 more. Never mind. Keep Network. Here is let's see. Hey, audience, we checked out. Keep Network. Here's what Kraken has to say about Keep Network and its Keep token. The Keep Network is a software aiming to incentivize a global network of computers to store private information that can be deployed on public blockchains via smart contracts. Many decentralized applications, dApps running on public blockchains like Ethereum, require the use of private data such as health records, credit scores, and financial information to operate. To protect individual users' privacy, the Keep Network enables private data to be stored outside the blockchain in keeps. They call them keeps, which are containers that allow smart contracts to manage and use pieces of the stored data without exposing it to the public blockchain. So this was kind of like the Lightning Network on Bitcoin or something. It's a second layer platform that just stores the data there and on in these keeps, they're calling them. In order to operate a keep, nodes must stake keep tokens, Keep Network's native cryptocurrency, to be selected by the Keep Network. These nodes are awarded keep for successfully maintaining keeps. Kraken also mentions that the first application built on the Keep Network is TBTC, which serves as a bridge between Bitcoin and Ethereum. So there's nothing really revolutionary happening here, I don't think. It's just a second layer protocol that's going to store data on its own blockchain and then, when needed, interact with the Ethereum blockchain. Dodo being the next. Ticker symbol Dodo, DODO. Dodo is a liquidity protocol powered by the proactive market maker PMM algorithm and built for capital efficiency. It offers a low barrier to entry, pain-free token issuance mechanism for long-tail assets, and it has a contract fillable liquidity that is comparable to centralized exchanges. Dodo. Arweave, ticker symbol AR. I think that's the first one I've seen that's just 2 letters. Nice. Arweave is a new type of storage that backs data with sustainable and perpetual endowments, allowing users and developers to truly store data forever for the very first time. Arweave has the concept of proof of access, POA. The core technology that powers the Arweave is the blockweave. Just as a blockchain is a linked collection of blocks containing transactions, a blockweave, specifically designed for the Arweave protocol, is a set of blocks that contain data linking to multiple previous blocks from the network. This data structure allows the network to enforce that miners provide a proof of access, POA, to old data in order to add new blocks. Unlike a traditional blockchain where miners are forced to spend electricity in order to earn tokens, in the Arweave network, miners are also encouraged to replicate valuable data, the information stored on the network, in order to gain tokens. This mechanism offsets the value that is normally wasted in blockchain networks with useful, energy-efficient storage of data. So it sounds like Arweave is a competitor to Filecoin, Siacoin, and some of the other storage projects out there. Good stuff. All right, let's wrap things up with our crypto terminology. We are in the Well, we did D already. We are in the E's. ELI5. ELI5 is short for Explain Like I'm 5. A plea for simplicity when crypto concepts are being explained. I make every effort to bring things down to the EIL5 level on this podcast as much as I possibly can. If I'm not achieving it, let me know. Shoot me an email. Text me something. It can be difficult. It's hard to know what people don't know. I find that even in personal conversations with people, it's like, okay, if you know this stuff, just nod your head and tell, yeah, please don't be offended. I just don't know what you know or don't know. So I just cover all the bases. ERC20. ERC20 tokens are tokens designed and used solely on the Ethereum platform. ERC721 is a token standard for non-fungible Ethereum tokens. An Ethereum improvement proposal introduced in 2017. Those are often called EIPs. It enables smart contracts to operate as tradable tokens similar to ERC20 tokens. Yes. Emission, the speed at which new coins are produced and released. Enterprise Ethereum Alliance, the EEA, a group of organizations and companies working together to further develop the Ethereum network. Escrow, a financial instrument where assets or cash are held by a third party while a buyer and a seller complete a deal. Ether, the form of payment used and the operation of the distribution application platform Ethereum in order to incentivize machines into executing the requested operations. Ethereum Improvement Proposal, we already covered that at EIP. Ethereum Virtual Machine, a Turing-complete virtual machine that enables execution of code exactly as intended in the runtime environment for every smart contract. I think we covered these already. If we did, I'm sorry. I guess we're just going to be, we're just doing repeat. We're just going to get these terms. Hey, what does it take to learn? Repetition, right? I think I lost track of where we were. Now I have to go back and look. An exchange. An exchange is a cryptocurrency exchange, sometimes called digital currency exchanges. They are businesses that allow customers to trade cryptocurrencies for fiat money or other cryptocurrencies. Different from a wallet. We talked about that earlier. Exchange Traded Fund, an ETF, a security that tracks a basket of assets such as stocks, bonds, and cryptocurrencies, but can be traded like a single stock. Yeah, we've done all this. FOMO, FUD. All right, we'll pick up wherever we left off. I'll go back and review just to get it right tomorrow. All right, friends, thank you so much for your time. It's been great. Please remember to go to blockthrasher.com, sign up for an account. Even though I haven't been getting content up there will be I've got a ton of super useful content, tutorials and stuff like that I am working on that will start to be launched, that will start to be posted there. So please go to blockthrasher.com and sign up for, even if it's just a free account, or if you appreciate all the work that's being done with the podcast and YouTube videos and whatnot, you can help support me there too. You can sign up for a monthly membership. It's just $5, barely anything, but it will help me to continue to do this and to do it better and spend more time on research and preparation to bring you better information. Check out the Facebook group, which is groups/blockthrasher. Love a follow on Twitter if you're on Twitter, on the Twitter platform. Hope you have a phenomenal day this Wednesday, April 21st. And remember, it's always a great time to earn, stack more crypto. Appreciate and love you all. Talk to you soon.